In this segment, we're going to take a look at the S&P 500 and the Dow Jones Industrial Averages from a technical perspective, utilising 4 charts. Let's kick off with the first chart, the daily candlestick, S&P 500 overlaid with the 50-day and 200-day moving averages. The market clearly trading above these medium-term indicators at best. S&P 500 at the top of its short-term trading range. Short-term, some of the technical indicators, the secondary indicators, remain overstretched. Given the sort of background in terms of the fundamentals, still no China deal, and a job market tightens further as we speak. Index gains, just as a headline, from late December and are now in excess of 20%, so 20% rally on the US markets. Overhead technical resistance on the S&P 500, this 2800 area. This ceiling turned down the rally attempts back in November and December last year. So some people would look at that as some type of triple top formation. So it really is an absolute key chart point. Let's have a look at the RSI on this chart. Again, it's stretched, it's a tad overbought. Again, not a reason to basically cover longs or take an opposing view just because a market is overbought. As we know, markets can stay overbought much longer than we can stay solvent. Let's move on to the second chart. We've added the parabolic SAR signal on that. And again, it's very clear that we've got this consolidation on this chart, and it really is make up your mind time. Let's take a look now at the Dow Jones Industrial Averages. Again, clearly above the 50-day and 200-day moving averages. So you would think that some of the momentum-based signals, okay, that the algos basically push the market one way or t'other, again, would be suggesting, you know, this market is still okay. I like the fact that as we consolidate at this area, we're not getting any sort of heavy down sessions, which is encouraging, but the RSI is basically pulling back. Let's wrap up then with the final slide. Again, the Dow Jones with the parabolic SAR on it. And this basically is turning over. So short term, it's suggesting a sell indicator in place. Momentum, as said on the RSI, turning over. But given the extent of the rally since the December lows, you know, at worst, this may be just a pause for breath and nothing more sinister than that. Again, with the 200-day moving average on the chart, as long as we trade above that, you know, technically we look okay. So nothing too sinister, I would say, on these 4 charts we've just covered.